Good morning, good afternoon, and good evening, one and all. I'm Rustin Edwards, based in Geneva, with my illustrious, relaxed co-host Matt Stanley in Dubai, and welcome to another episode of The Smoking Barrel. What's up, Matt? How's Dubai?
Fantastic, mate. About 24 degrees. I've lost 10 pounds in January so far.
Where'd you put them?
Well, I don't know. I fell out of my pocket last night. Um, we had dirhams here. No, I'm good. I'm good. I'm good. I'm enjoying the weather. I'm enjoying getting back into the swing of work. I'm traveled last week. Was in Singapore. Good to see everyone there. And I'm in Barcelona next week. We've got a company-wide offsite. So if anyone wants anything to do with Kepler next week, I'm sorry, we're on holiday for a week. No.
So you got a
Uh,
404 not available error every time you log into your Kepler platform. I get it. Okay.
exactly. No. We will be available because we're professional people, or they are. Yeah, no, good. No, I'm fine. I'm fine. I'm looking forward to seeing you in less than a month now, mate. IP week or IE week.
IEIP week, IEIEIO.
Yeah,
Had the
exactly.
world converge on London to talk about what's going on with oil markets.
I tell you
And
what, I
what a
think what it's gonna be this year. I mean, I know we're going to cover it, but it will be to me. And forget Donald and all that. We'll do that in a minute. But I think what people are really going to talk about this year is going to be gas. I think gas is going to dominate. I mean, I know crude trader talking about, but gas is just seems to be based on my conversation so far this year. You know, the 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 incessant drive towards burning cleaner fuels I think is going to dominate the headlines once again. But let's see. Let's cover that during IE week in the alleyways of Shepherd's Market.
yes. Good conversation points. But
Yes.
we got crude oil hovering around 77.70. Took a big hit yesterday on the back of the deep week's headlines, along with a lot of other risk assets, as people were trying to figure out exactly what does that mean for them and their kin and their world. We've got, as you said, Donald Trump out throwing all sorts of different executive orders, declaring energy emergency in the United States and declaring, threatening to put tariffs on Colombia, and then pulling them off as soon as Colombia acquiesced. So, using the hammer and the cudgel to get what he wants done.
Yeah.
Um,
Yeah. That
so
was
very interesting markets for it. Uh,
yeah. Yeah, it was. I mean, it was. I covered this yesterday on my commentary actually. I thought I'd just have a look at five sort of things that, or from an energy point of view, let me bring it up, where what the Donald has done so far. Because look, it's not. It shouldn't be a surprise that he's got a very America-focused centric. In terms of that was always the agenda: make America great again. And like I said yesterday in my commentary, it wasn't make America great again, but only if it's to the convenience of other people. It was a very, clear directive that he had. Energy policy was clear. I mean, if you look at the five things that he has put in place since he's been in power, and he's not, I don't think he's even started yet, if I'm honest. Um, we've seen him double down on promoting US energy independence by rolling back regulations, opening new areas for exploration previously closed by Joe, and fast tracking LNG export terminals. He's exited the Paris Climate Agreement, reducing pressure on the US to cut fossil fuel consumption, proposed tariffs on imports from Canada and Mexico because they do import quite a bit of energy from both neighbours. And then he told Davos and MBS to bring down the price of oil. So he's got quite an aggressive agenda when it comes to energy policy. But I don't think anyone is surprised by that. Do you?
Well, I think the surprising thing was the tariffs that he threatened on Canada and Mexico, and there was some clarification that those tariffs would be more on manufactured goods, not so much on energy, because the U.S. does import roughly 4 million barrels of crude oil from those two regions, and if you lose those imports, you don't have the right crude mix to run your refineries.
Yes.
Primarily, Canadian Mexican crudes are heavy sour crudes, which melds very nicely with the U.S. Gulf Coast refining system as well as the Mid-Con refining system, where those barrels end up going. So it's one thing to say we're going to put a tariff of 25%. It's quite another thing to have, on the other hand, trying to drop the price of energy to the U.S. consumer, because that was one of his big points of declaring the energy emergency. was to get the price of gasoline and the price of in-bed energy to drop, which then has that knock-on effect to price of goods, because if you lower the cost of fuel, the price of transporting goods drops, which means the price of delivered goods drops, which means you have lower cost of material in your local Walmart and Kroger.
There you go. I mean, look, if only there was a way that we could check what the flows of. Oh, would you, Adam and Eve? I've only got something. There you go. Son, ring, wave the klaxon, whatever you do with those things. Right, look, US imports from Mexico and Canada. 2 million barrels a day, roughly. That's what we've got.
Just for clarification, this is waterborne imports.
Yes, we can include
Yes.
intra-country flows. Yes, there won't be any because it's not an intra-country. Yes. Have we got the pipeline stuff? Look, let me have a look. Look, we've got total here. Let's do it by origin country so you can see the split. Right, so December, 1.8 million barrels a day, 1.1 was Canadian. We can go into the weeds. Where was this source? Let's go by sources. Oh, sorry, hang on. Can't even work my own. I don't know what to think. I work at Kepler. 1 second. Let's do it by grades. Right, so you've got Mayor's obviously a big part of it. Others we've got, let me go into something else. Talk amongst yourselves. By seller, did that help you? So you've got Pemex, the big one, Irving's another big one, and then we got others. But let me just do it by total here so you can just see. I should have really rehearsed that to be honest before I pulled it up. That you've got, this is across everything. I could just do crude. We've got chems here, we've got bulks, bitumens, diesel, gasoline, whatever it may be. But I think that it's clear that there is a cornucopia of products that the US imports from Canada and Mexico. I mean, look, let's say if you're I don't know, let's say who are the big buyers of this stuff?
Well, your big buyers are usually your refiners because of the crude
Yeah.
that flows.
Okay, look, so P66 are buying 220,000 barrels a day and Valero as well, right? So you're taking that into the St. Charles refinery or wherever it may be. It's down there.
Christie,
Now,
Houston, depending where they have their plant. Yeah.
when these tariffs were announced, Canada's and Mexico, if you're Valero and you did you work at Valero or you were Chevy, but you were Chevron, weren't you?
No, I'm sure.
Sorry about that. I should have done more research this morning. If you're Valero or P66, are you going? What's the reaction in headquarters? Are you like, oh shit, like where am I going to get my oil from, or is it going to cost me more? Like you said, is it eventually going to result to a higher end user price? I mean, what do you think the conversations will
That's
be?
the whole reason why those refineries are designed. The refineries that take in the Mexican crude, for example, or the Canadian crude. They're designed to run that crude, and being heavy sour crude, that means they have the whole destruction capacity downstream from the CDU all the way down to a coker. And so with that, they're going to remove all consumer good fuel from the crude oil and leaving a pile of sulfur and a pile of petcoke at the end of the day. So,
Right.
nevertheless, if you increase the tariff on those crudes coming in, you have basically increased the price of your finished goods because that crude oil price goes up. You pay a tariff, okay? The price per barrel is not going to go down. It's not going to remain the same. They're going to add that to the price of oil to cover the cost of the tariff.
Yeah.
So
I mean, look,
you end up with
is
inefficient operation, is what you end up with.
okay. Yeah, look, I mean, I think that it's that there's a few talking points here. I mean, when I was just concentrating on the Donald, what happens there? Like I said, I mean, when people coming out of Davos were like, okay, it's a very I think I forget who it was. I think it was the head of Amnesty International who's interviewed when she was coming out saying that she's really worried because you know Trump made that speech. It's clear that it's an America-focused policy, very America-focused rather than sort of on a global scale. But I mean, you're in the States in a couple of weeks. You're going to. Am I allowed to say that? We can edit that out. Thanks, Irene. Um, I mean, what's the conversation over in the States? Are people like, okay, this is a good thing for for the country in general, or are people a little concerned that he is almost shutting the borders?
Well, I think that's if you go to regions, every region's going to have a different take on it. Unfortunately, it's not something you can just broad brush around America because everybody's had a different impact. If you're on the border states, there are people who support the reduction of illegal immigration across the border. There are people who don't support it because they think it's cruel and inhumane treatment to not allow the free flow of migrants across the border. But nevertheless, it's something that the Trump administration has done, and they've clamped down and they've shut down the border crossings. As the recent stats have shown, that the amount of people trying to cross the border have dropped from 4,000 a day to 600 a day, according to the
Wow.
Customs and Border Patrol in a recent report that was put out. So it's had its impact, knowing that the illegal immigration is not welcome in the United States. Now the net impact is going to be what is that going to do to the labor market? What is it going to do to the cost of business? Because unfortunately, the reality is the illegal immigration provided a low cost base labor force that were doing jobs, a lot of menial jobs. Now if those go away, or if the labor goes away, and you have to start hiring above board people to do those jobs, costs are going to go up, and then people may not like that. So, it's a question of what is going to be the net knock-on impact, and it probably won't be felt for another 6 to 8 weeks because that's usually how long it takes for all this stuff to flow through a pricing scheme. Um, when you
Yeah.
talk energy and tariffs, the same thing. Tariffs are um, what they are. Are they inflationary? No, not really inflationary. They just increase the cost of goods that are being brought in from a third party nation into the United States. So if there's an alternative US based product, the supply and demand should say, okay, instead of paying more for this imported product, which now makes it more expensive, I'll buy the domestically produced product.
Can I
Doesn't
ask a
cause
very Can I ask a very naive question? Um, is I mean, look, tariff is going to be a buzzword. It's going to be one of those years that I think will probably sum up 2025 when we come. I know we're only at the end of January. When we come to the end of the year, I think that the word tariff is going to be the one that is going to sort of, in reflection, that sums up. Well, have the US all? I mean, this is really naive, and I should know this probably. Have the US always had tariffs on imported goods from these countries, or is it just a? It seems like Trump has sort of got hold of this buzzword and gone, I love tariff. It's the greatest word in the English dictionary. Um, but have they always been there, or is he just increasing them? I mean,
tariffs. Tariffs always have existed and always have been used by the US government and other governments. Not just the US is not the only country in the world that does tariffs, number one. So there are tariffs all over the world. Some tariffs are protectionary. For instance, in the EU, there is a huge tariff against imported biodiesel from the United States. Why? Because the EU wants to protect the EU biodiesel refiners. So the United States can outproduce the EU when it comes to biodiesel. So to de-incentivize EU imports of US biodiesel, they put a massive tariff on it.
really?
Yes.
That's interesting. I did not know that. Okay. Okay.
That's just one example. Now, in the United States, yes, tariffs exist. They exist on certain goods and products being imported in. And depending on what the reason for the tariff, it's there usually as a protectionist nature.
Right.
Tariffs have always been a part of the U.S. Revenue streams for the government. It used to be that tariffs supplied 100% or majority of the revenue for the U.S. government. Now it's a minority where it's more income taxes.
That's really interesting. Can I just on the biofuels thing? That's really interesting. I did not know that. So let's just share this. This is European monthly imports of biofuels by origin country. So yeah, they're tiny. So 21. Okay, so there is a little bit.
Yeah,
I
a
mean,
little
if I do
bit.
it rather than barrels a day, let's just do it in KT. Right, so 800,000 tons in December, 79 of which came from the States. So it still exists. People still um people are still doing it, but you get charged a tariff. So what is it, a percentage of the value of the goods or a fixed fee? Or I mean,
Usually it's
what
a
do
percentage
those
of the value of the goods. I don't, I'm not fully conversant in the full tariff on biodiesel imports, but it's on the value of the goods, percentage of the value, usually.
And is it just the States? I mean, because China are quite big suppliers. They've sort of, 84,000 tons. Obviously, intra Europe is encouraged. You've got some Argentinian stuff there. The rest is fairly negligible. China, 84,000 tons. I mean, I didn't know that. I mean, and I think a lot of people, I hope so, like, comment, subscribe, for Edwards, not me. I'm not on the best form today. But when it comes to the word, I think people, and we're going to talk about DeepSeek and AI, all that shit, what happened yesterday. We'll talk about that in a minute. But tariff, I think a lot of people, it's one of those conversations that, like Joey, our friends, when people are having in the coffee house and you sort of nod along and try and laugh at the right minute. But you're kind of like, I need to read up a bit more about all that because I don't know. Tariffs, I've got to say, is one of those things that is being bandied around like it's always been there, and I'm sure it has, but it seems to be his biggest leverage right now. And I got to be honest, I didn't really know much about it. I didn't know that about biodiesel, but I mean, that's fine. Well, I don't really follow the biodiesel market. Other people at Kepler do, like, comment, subscribe to them as well. But I mean, is it okay? Fine. So they've always been there. Is it not a little like, I don't know, like he's got like access to being able to put these tariffs on? Has he not gone a bit over the top? Is it not like a bit of a sort of like last throw of the dice kind of tool that you would use, going, well, I want to make America great again, and the way I'm going to do that is by making things more expensive for those who want to sell it to us? Is that not kind of a bit desperate?
I would say that it's a tool to use. I wouldn't say it's desperate because again, it's kind of okay. The U.S. is a market of 330 million people. Um, do you or do you not want access to that market at a cost-effective price?
Hmm.
I mean, that's the counterpoint. So if you want access to that market, we want this policy, do this policy. Oh, you don't want to do that policy, you don't get access to the market unless you pay this fine now.
Okay.
Now, I mean, and that's it. So it's a negotiating tool. I mean, like what happened with Trump and Colombia. Trump sends migrants back to Colombia on a military jet. Colombia says we're not going to accept that. Trump threatens, I think it was 25% tariffs on all Colombian goods, going up to 50% on the next week if they don't acquiesce. Colombia first threatens to put tariffs on U.S. goods, and then 2 hours later acquiesces and accepts the military jets, and Trump pulls the tariff card away.
But why has no one else used this? Like, why is
Because
it
it's not
something that?
nice. I mean, in our
Right.
world of trade, in our world of globalism, it's not a nice thing to do. I mean, we've been growing up in this world of we have to be free trade, we have to be global, we have to think globally. You can't think isolationist. And now the pendulum is swinging the other way, where you've got a lot more isolationism coming into governments around the world, where the free trade mantra is no longer being batted about because it's been abused by so many people, I think, as well in the past.
Okay. All right. I was having this conversation last week. I mean, let's bring it back into the optics of what it means for oil, right? LPG, right? I was talking to an LPG trader, so of course that's where the conversation went. Now, if you're a US LPG trader and China are one of your main outlets, what happens there? Like, the US exports, are they affected?
Well, it depends on what happens with the receiving nation. So if you put a blanket 25% tariff on China, as an example, China can always reciprocate back and put a 25% tariff on you.
Right. So, okay, and then Trump says, no, well, actually, it's 50, and they go, well, actually, it's 50 on you. Are you
Yes.
really? How have we
But
got
you
to a point is in
in
civilization?
the United States have already put tariffs on Chinese EVs, as an example.
Right. Okay. Fine. That's good. So, uh, is okay. Right. Let's talk about the electric vehicle. So that's to incentivize. If you want to, Trump said it's your prerogative if you don't want to make things in America. If you don't, we are going to put tariffs on you. Okay. Fine. But the US has quite a big electric vehicle manufacturing sector, right? If China are cheaper on a landed basis per car, then of
Yeah.
course it doesn't make any sense. The US people are going to suffer. People are in that industry because they're going to be out of a job because no one's going to buy the more expensive product. So you make the Chinese good more expensive than the US one, and then you increase demand, organic demand.
Okay, Donald.
No, no, I'm just saying. I'm fucking hell. Sorry, language.
You just made Donald Trump's argument.
Yeah, yeah. So okay, that is the argument. So okay, so globalization
Just
is
have to remember that part of his base, the reason why they put the tariffs on is to try to cut the amount of taxes being incurred on the U.S. worker. This is his idea: is that we increase tariffs across the board and we can reduce the income tax.
okay. Okay. Right. Now, while we're on the subject of Musk and China and the US, let's talk about what everyone talked about yesterday, deep seek. So
DeepSeek.
deep seek. So what I did was I asked artificial intelligence about artificial intelligence. And I said,
And,
could you let me
and the
know?
computer had a conversation amongst itself at that point.
This is where I thought it's going to go. I can't process this. What do you attribute the sell-off yesterday in your own stocks? Oh, it could be attributed to a number of factors. And then I went, oh yeah, nothing to do with DeepSeek. And then it went into this like deep search, right? This is ChatGPT I'm referring to. Other AI is available, but ChatGPT is the one I use. And if it reads, the recent sell-off in AI-related stocks can be significantly attributed to the announcement by DeepSeek, a Chinese AI startup which has introduced a new AI model named R1. Now, I'm not going to carry on; it's quite boring. But I know that I've sounded like a numpty. I usually do, but we've just spoken about tariffs. I think the buzzword last year was AI for sure. I think DeepSeek is the second one. Yesterday, how much was wiped off Nvidia shares? 500 billion or something. Like,
Yeah, 1 trillion in tech stocks wiped away in value.
right now, I can't fathom how many zeros that is, but okay, it's had a good run. Last year, it did very well. Nvidia has completely outdone himself, and Jay Huang, I think his name is, the only bloke I know who's brave enough to go up on stage wearing a leather jacket. But anyway, we'll gloss over that and his wardrobe, him and his billions. Nvidia shares dropped by approximately 17%, and other tech giants like Microsoft, Alphabet, Google, and Tesla also face substantial losses. Okay, I'm sure this wasn't a surprise, right? I'm pretty sure that this app has been there for a while. Oil prices, though, right? This is where we're going to go on to because we are an energy podcast, people. We're not a explain to Matt what the simple words in the English alphabet mean podcast. So that was announced yesterday. We were trading this time yesterday at $79 on Brent. The US woke up and went, oh my God, DeepSeek, sell everything, run for the hills. Down it went. Brent went down with it. It was risk off across the board. The dollar and gold did okay. Bitcoin pissed about because that's all it does. I mean, is this back to the previous conversation? Is this China sort of saying, all right, forget your tariffs. We too can play that game. Have a look at our model. Have a look at our artificial intelligence. And is it a warning to those titans of the business like AI and Tesla that the Chinese are coming for them as well?
I think it's a warning of innovation because what DeepSeek is, it's not so much a new chip or a new computer. It's a different way of doing AI language, programming language to make it more
Doing
efficient.
language.
Yeah.
Is that what they say in the boardrooms of DeepSeek? Let's
Well,
do
no, no,
language.
it's so when you think of it like so the current leaders in AI technology have been going down a certain pathway, and they've been writing their underlying language, which creates the AI, which that everybody uses, and they've been writing it a certain way. And
Okay.
with that language that they've written, it uses energy infrastructure and computing infrastructure at a certain rate, and they think they have the best way of doing it. So what the Chinese have done, they've introduced a different language, which is probably looked at how Chat GDP, sorry, I'm not going to put cachet, but just as an example, looks at the underlying architecture around a Chat GDP and says, you know what? You don't need this line of code. You don't need that line of code. You don't need this module. You don't need that module. We can build it to run cheaper but still have the same functionality because we can analyze what you've done already
Right.
and cannibalize and say you don't need all this other stuff because that was because some programmer 15 months ago said, oh, yeah, we need to do it this route. Oh, let's change your mind. Let's go this way, go that way. And so you've created this larger body of underlying architecture around the language, which has now been streamlined by DeepSeek. So DeepSeek is not like a new chip or anything. It's just the fact that it does the same stuff as a chat GDP at half the energy usage. Now,
Right.
when you think of the growth of energy demand that server farms and AI is said to produce, and oil is part of that greater energy mix that happens in the world, you know, nat gas, oil, renewables, coal, nuclear, and all of a sudden you've got something instead of using 100,000 gigawatts only needs 50,000 gigawatts to do the same work. That puts a bit of a bearish incentive on energy usage overall because, oh, we don't need all this new energy now to do that work. We only need this much energy.
Well, 100,000 gigawatts. Dr. Emmett Brown would literally have a heart attack. It was 1.21 gigawatts and he went mental. Imagine 100,000. Anyway, sorry. So that's how much I'm adding to the conversation here is 1980s movie data. No, look, I mean, the Wall Street Journal summed it up. They said analysts are now, and look, again, I know this is important because I'll land why it's important for all markets in a minute. But I think, like I said, DeepSeek, AI, what it all means, and tariffs, etc. I think are the words that are really driving markets right now. Wall Street Journal summed it up nicely. Analysts are now debating the implications of DeepSeek's breakthrough. Some view it as a Sputnik moment for American AI, highlighting the rapid progress of Chinese AI technology. Others question the veracity of DeepSeek's claims and whether such advancements can be achieved without access to advanced GPUs, which are subject to export restrictions. Despite these uncertainties, the announcement has undeniably introduced a new competitive dynamic in the global AI industry. I think, look, massive sell-off yesterday. Correction, 17%. Biggest company, everyone was buying it. Everyone will continue. In fact, it's a good buy down here. I mean, that's not a trading call, but I think it's, lots of more people are using it. It's becoming endorsed. 2 years ago, it was, well, what's that? It's like you're cheating. That's not really a conversation anymore. But I think what all this boils down to, tariffs, Trump, China, interest rates. Um, if you're if you're looking at oil markets right now, it's not oil market fundamentals that are driving it. Chinese New Year, happy Chinese New Year, Year of the Snake. Everyone's off for the rest of the week. Have a nice time. I think once data starts dripping in on what demand from Chinese New Year, because lots of Chinese New Year, people stay in China. They don't really travel abroad. It's changing a little bit. What demand looks like there. That'll really be the first sort of litmus test for the year where what oil demand looks like. Right now, all that's driving oil markets is what Trump will do, what China will do in retaliation, and seemingly a wider sort of macro environment because oil
Well,
followed tech stocks yesterday.
well, I think it is a more, the first part of the year of any trading year is more sentiment driven than actual driven because you have a lot of either analysts that have come out saying this is what demand looks like, this is what supply looks like. Oh my God, we're going to have a tight market. Oh my God, we're going to have a loose market. And traders trade accordingly. I mean, a lot of the dynamic of January trading so far has been around Russian tariffs and what's going on with the Russian fleet.
Yeah,
Then you had the first real risk off happened with the Gaza truce with Israel and Hamas.
yeah.
And, is that going to hold? Okay, we're 2 weeks into the truce. It's held. What are the Houthis going to do with the Red Sea? That's put downward pressure on the oil markets in general because the first ships that are going to probably transit the Red Sea are going to be petroleum tankers and dry bulk, and then followed by containers.
Yeah.
But nevertheless, it's all sentiment driven based on what's going on, not on actual changes in the ebbs and flows of oil around the world just yet. It's all sentiment change. And we'll probably see more of this in February when reality starts to come in. When we see, okay, China's done their pre Chinese New Year buying.
Yeah.
What happens when they come back and they say, do they need to buy more or do they buy enough?
Yeah, I think you're right, and I think yeah, you're right. It's always seasonality this time of the year. I agree, but I mean, there's for what has been a fairly, I wouldn't say. benigns the wrong word. Quite a calm start to the year, considering what was happening at the end of Q4. Trump coming in, people were worried. That's largely been fairly well managed so far. The transition from Biden to a Trump administration, that was fine. Of course, he pardoned like 2,000 people, whatever it was, and that's okay. But all markets have kind of sort of, 81.60, I think we got to once the US sanctions were announced on Russia. 77.50. I said yesterday in my commentary, I think 77.50 is the new 72.50. I just think we're a $5 higher range than we were Q4. But I think you're right. I think once a lot of that risk premium is priced out after, people worried about Russian flows, nothing has really happened there. All markets have calmed down. The only thing that's really gone big on the back of that has been Suezmax freight, because how are the Russians going to move stuff around? But like you say, oil will find a way.
It will find a way. And, I think the big change is probably going to happen in markets is that if people start running the Red Sea again through the Straits of Bab el-Mandeb, and they can do it rather easily, that increases general supply to the market because your transit times from
Yeah,
refineries and production regions are dropped by 14 days.
yeah.
And that could contribute to a general sell-off in structure as well as in flat price. So the question to you, Mr. Stanley, 81.76, is that the high of the year?
Not a
Have we
chance.
seen the highs of the year already?
We've got a 90 in us before the end of Q1. I just I don't want to sort of encourage drama at all, but I think pop up to 81.70 on the back of US sanctions, bit meh, right? I just think there's what the year has taught us so far is it's been the last year and trade's been and I know it always is, but I just feel like a Trump administration has a spanner in it somewhere. And I'm not talking about the big man himself. I'm talking about a spanner in terms of management. All right. Donald, if you're listening, sorry, not sorry. I know you're listening as well. Let's do his dance. Anyway, right. Where are we? 77.50 Brent. I think we could be here for the rest of the week. Chinese New Year, bit thin. I'm away next week, bit thin, not at all. And we'll be back in 2 weeks. But it's good to see you, mate.
Well, just like your weight, I think we've seen the highs of the market, $82. Probably not going to get above that ever again for this year. I think we're going to be grinding lower and staying lower for longer. Um,
Big call that, mate. Big call. One, you've got
it's
11 months and you've got
you know what? If you're going to put it out there, you got to put it out there.
well, do it. I mean, okay. Look, ye shall be judged. All right, don't forget to like, comment,
He said,
subscribe.
happy year of the snake to all those celebrating Chinese New Year. May you have a prosperous and healthy and awarding New Year for you and your families.
Yes.
Thank you all. Tune in, click like, comment, and subscribe, and we'll catch you all next week.
Ciao.